Established LNG buyers in Japan, South Korea and China are facing increasing challenges. They are contending with slower economic growth, policies that favour other generation options over gas and intensifying competition, the result of market liberalisation, particularly in Japan and China. With new contracted volumes increasing, as Australian and US projects come on stream, several Asian buyers look like they will be left long as contracted LNG exceeds demand. However, the duration of the oversupply differs. In some markets, like South Korea, declines in legacy LNG offtake contracts will reduce the impact of the oversupply through the long term. However, in China, there is no such decline. Furthermore, the impact of market competition risks Chinese incumbents being permanently overcontracted, as can be seen on the first chart. There are now nearly 20 new LNG buyers in China seeking to procure LNG directly from the international market. These emerging LNG players are being courted by a score of eager sellers desperate for new off-takers and prepared to offer long-term LNG at prices less than that paid by incumbents. This will challenge the position of incumbent aggregator national oil companies, CNOOC, PetroChina and Sinopec. For now, the practicalities of these new entrants actually importing LNG is a challenge. Without third-party access, they currently struggle to get access to existing NOC regas capacity, posing a very significant barrier to entry. However, as can now be seen on the second chart, Chinese new entrants have proposed 24 million tonnes of their own capacity, and much of it is under construction. Given this, it looks inevitable that they will eventually cannibalize demand from national oil companies, increasing the oversupply. New entrants are a growing trend across Asia and present potential challenges to incumbents. Low prices and growing supply availability look set to accelerate this trend. However, the risk of corporate oversupply and the pace of new entrant activity is greatest in China and points the way to a market where liberalization appears increasingly inevitable.